Well, let's ask that to Samir Arora of Helios Capital, who's live with us right here on ET now in today's edition of the market. Good morning. Always great to have you on the show, on the channel. With what all is going on, we saw green today. We saw green yesterday. But overall, I would love to first begin by asking you the market breadth, the construct, the way it has been performing. The FIs continue to sell. It remains a DI market. What do you make of the market construct?
So I think I have to be cautious on the market as I have been most of this year. And I think that we will not really settle down till the US market settle down. And the US market, even yesterday, NASDAQ was down 1.25%. I think that if you look at the previous falls or big falls in the US and maybe similarly in the rest of the world, it normally ends with either the Federal Reserve coming in a big way or government coming in or somebody coming in to support in some sense, which is not only missing, but they are on the other side right now, or the valuations have to become much cheaper. I think the US market has not settled down, and I don't think, therefore, the Indian market can easily settle down.
Okay, so you stay absolutely cautious, but Samir, we're also talking at a time when we had seen a fatigue for the blue chips. Some side of a comeback is looking like, as is an upswing in the broader markets.
So the thing is that, if we looked at the problem from January onwards, it was, at least in the US, it started with the fact that the inflation number is higher than expected, or whatever was imagined before that, and therefore interest rates will go up. And therefore, the valuation of the companies in India, similarly, and in US will be reduced. But what has happened in recent weeks is that the earnings themselves are also not coming on par. So one was that the valuation will be lower because the interest rates are higher. That's where the real value comes later, or from years of growth, that those will be affected simply because the discount factor is increasing. But in the last few weeks, neither in US nor in India are even the regular results coming out as were expected before. Therefore, if you see all these stocks which are down a lot in the US, it's not so much. I mean, for some of them, it is purely to do with the fact that now you don't want high valuation companies. But on many others, it has been because the results have been poorer than expected. Similarly, in India, if you see the banks, you see the tech companies, they have barely met their expectations. So, we remain bullish in the sense that we are invested in the market. But on the margin, I don't want to celebrate every 0.5% move in the market because I think this is not going to end in the next 1 week or 2 weeks. Maybe it ends after 2-3 months when the US market has fallen a little bit more or a lot more. But if it doesn't fall, then to see the actual withdrawal of liquidity by the Federal Reserve, because what we have seen this year is that the US guys are also pushing it to the limit. I mean, in the sense that even though many of these things were predictable not many years ago, but few weeks and months ago, they still want to push it to the end. Therefore, I don't believe anymore that they have discounted or know how to handle the withdrawal of liquidity and stuff like that. And in India, the story is much simpler. To be slightly cautious is because every evening these guys come and sell 3,000 crores of stocks, other than maybe yesterday when they were kind to only sell 1,700 crores. We cannot take 3,000 crores every day if it keeps coming. And when for a few days it doesn't, we'll say, okay, one problem is over. But right now, I think it is not fully over.
Samir, to put it very simply, it's a question which I'm asking everybody who's coming on the channel. Has a bear market started, or this is a bull market correction? If this is a bull market correction, then perhaps we'll have to just wait it out.
This is a bear market, not correction. Bear market has happened in many stocks. Many stocks. These are all stories that whether there's a bull market or a bear market, it would be best if we could say that it's a bear market which will get over in a few months, because bear markets normally don't fall 50%. It is only in 2008 that they fell 50, 60%. So a bear market, if you look at it otherwise, was 25, 30%. And in some sense, in India also, many stocks have fallen 25, 30% or more. So instead of calling it a correction in a bull market, I think it's best If we say it is a bear market, it is about to end in a few months, because mostly the duration of bear markets doesn't go on for years. Even if you look at 2008, you may say that it started in January 8 but ended in March 09. But actually, if you could have been broadly a little bit protected in January to October 30th, then mostly you would have escaped. So we are not escaping by saying we are protected. What I mean is the duration of the real falls are only 7-8%, 7-8 months. Even in 2000, you can say that it started in March, April of 2000, and then nearly played out by December. But then next year, when it was recovering, we had another problem there, which was September 11. And therefore, if you look at calendar 11 numbers, they again look very bad. But that was because there were sort of two events sort of back to back. So don't call it a correction in a bull market. Call it a bear market, which is about to end in a few months.
Market which is about to end in few months. Now, like you said in your opening remarks, that for a market to bottom out, either valuations have to become very attractive, which they are not right now. We are in and around the long-term average, or something has to change at a macro front, whether it is Fed or war or crude or oil. So let's look at the other side. And I'm a compulsive bull, and let me argue back. I would say, Samir, every bad news is perhaps in the price, whether it is crude, whether it is Fed, whether it is war. So don't you think markets are already factoring in all the bad news?
Yeah. So that is the normal this thing. So I have another one for the bullish, because I am a bull and I have 90% invested. The thing is that in the long run, wars also don't matter. In the long run, if you look at wars if you look at the World War, you look at the First World War, you look at some Iraq war, blah, blah war, and you look at it on a chart right now, the war does not matter. But if you're in the middle of a war, does war matter or not? If we say, and many fund managers come on your channel and say that we don't predict inflation, we don't know about the macro economy. But if the inflation number is right now high, and right now the Federal Reserve is saying, or the Indian government has, or the Indian RBI has just surprised you in sort of a panic, this thing, then can we say for 1 or 2 months, let's just see what it is, instead of saying we don't know about these things. We don't know whether they're discounted or not. But just a week ago, there was like a panic surprise interest rate hike in India. So all I'm saying is we are also not bearish in any way. All I'm saying is let's not go with the story that in the long run this happens, in the long run that happens, because the long run is in the long run. Right now we are in the short run. It's like saying that, we obviously can't predict whether some individual will have an accident or not, but we can still tell him that don't stand in the middle of the road when the traffic is coming. It's like this. We may say that we can't predict a war, we can't predict some episodes of bad things in hindsight. But in the middle of that, you can be a little bit cautious and uh, not for every day say that everything is discounted. First of all, I don't think anything is discounted, simply because for 25 years I've been saying that India is a beneficiary of demographics of young population, and I'm still saying it. So for 25 years, how come we didn't discount this? Nobody discounts anything. For 25 or maybe 100 years, we are saying that US is a great system. It encourages innovation. It encourages companies to grow and companies to die. It is very flexible, and it even rewards failure. It gives you a second chance. Today also we are saying things for 100 years why this was not discounted. The same things are said forever, and they will be said again and again. So nothing is discounted in
Let
life,
me ask you
according
the
to
same
me.
question again.
Execution of those things are discounted.
So, since we are talking about same things being said again and again, which is same answers are being repeated again and again, let me repeat my question also. Question भी repeat करते हैं जब answer same होता है तो.
Correct.
So my question is that when this bear market will get over, what will happen? Where the leadership will emerge? Because one day the bear market will get over, right?
Correct. So my thinking is bear market can is better, because then we can imagine 4-5 years of a bull run instead of calling it a correction in a bull market, which means there's another bear market coming. So my thinking is that the US market is falling at a pace which is in a sense going to bring their settlement faster in terms of some value emerging and stuff like that. And so that will be uh, a signal or whatever trigger for the rest of the world, which may directly not be involved, in the sense that it may not be our problem because our inflation is not high, etc., etc. And then we'll start again. But the long-term themes will not go away. If you want me to tell you that if you have a 5-year view, what you should do with the 100% money, because we are also invested 88, 90, 85% and 10, 15% that we are trying to be cute about. But the long-term themes don't go away simply because those are the themes of the world, which are financials, consumer, technology. You see today the Forbes list of billionaires, which is a good indicator of where this wealth has been created in basically history, because it represents whatever they have made historically and what it is today. They will come from these three, four sectors. Once in a while, you may go offline and buy one event here or one company there. But thematically, the three themes of the world, and particularly for India, will always be financials, because that is a growth sector, because the economy grows at X, the financial sector grows at 1 point X times X. We are under penetrated, under leveraged, blah, blah, blah. Consumer, we have so many consumers, and tech pharma, because we are cheaper than the world in terms of producing these things, etc. Always will be these three themes, day in and day out.
Right. Samir, what do you do about the big theme today, LIC? Because those who were in it for an IPO pop, I think, are going to be disappointed. It seems like it's going to be a tepid start. But is it one of those portfolio must-haves? And if so, at what price?
No, actually, price is quite good. And I thought last time when I came that, we will apply, but we didn't apply because by the time the issue opened, the markets were so much weaker. But I think in a slightly longer term sense, first of all, you will not lose a lot, which itself is a big highlight in sort of these markets. And hopefully, I hope that the investors make some money, because the retail has been such a big part of this IPO. But overall, I think it'll do well. It may not do super well because the market is like that and the issue is big. And if you don't do well in the first 5, 7 months, then suddenly you come closer to the date when the second tranche of issue might come. So, look at these loss-making companies which are doing well. Now, all these prices that are there today, if these prices had been the IPO prices, we would have been very happy to buy them. But today we are still nervous about buying them, because now suddenly the 1-year lockups of all these private equity funds holding these stocks are over. And they will also have to decide whether they want to roll the dice for another X number of years, because they have finished their 5, 7 years. So when the overhang comes very close, then the prices can fall lower. So in the sense, if LIC has to do well, it should do well in the first 4, 5 months. If it is doing well by the 9th and 10th month, then maybe after the 12th month, the government is again looking to sell. Therefore, I hope that it does well now. And if we have to buy, we'll have to buy it in the next few months. Otherwise, everybody will keep waiting for the next tranche.
Right. Samir, Nikunj is very curious. He can't tell what's made on your shirt, whether it's a train, it's an auto. What is
Even
it?
I don't know what it is. I just buy things which are too colorful. So.
Tuesday morning, you're wearing
later.
you're wearing a party T-shirt. Where is the party today afternoon?
No, the party is there in the evening, some Columbus party. But more than that, it's because I was coming on your channel, and if I come on a boring white shirt, I look like other fund managers.
So color add कर रहे हो?
Rangeen.
Samir, any new magic tricks? Because that is the only thing which I think will take the market out now. You need
right
magic.
now, वो COVID टाइम की बातें थी. अभी serious टाइम शुरू हो गया.
But
But really,
Samir,
the thinking is, I would say कि थोड़ा सा caution in mind चाहिए. It's not that anybody is supposed to stop his SIP or all that. I just don't like the other end, that every evening at 5 o'clock we have to say this is the best day to invest and invest your 100% money, and you'll never get it. Or when the market falls, say, I don't look at economy, I don't look at inflation. What do you mean you don't look at it? It means that you can't predict it. But if you're in the middle of it, you can look at it also. There's nothing wrong and there's nothing to be proud of. In the middle of a thing, I don't look at these things. You can say I can't predict it. So therefore, last year, November, December, we also didn't know what it is. But when the Federal Reserve is saying, when the Indian Reserve Bank is saying, when they are coming with sort of a in-between hike or whatever, or a surprise hike, we can't say we don't look at it. We have to look at it as to why they are looking at it, because it makes a big difference whether the market is down 10, 20%. By the way, in US, it can easily fall 10 odd percent more, because there is no episode in the last 30 years where the market has gone up without the Federal Reserve intervening right at the end. But here, they are not intervening to help. They are, if at all, coming in to only be more negative on the sense. Also, if I look at it differently, if the US market does not fall, then the Federal Reserve, it's easier for them to do these hikes in a bigger way, because ultimately everybody has to agree that the US would like the inflation to come in control faster, except that they are not doing it because they are worried about the market. But if the market says, I am not worried, then it's just easier for you to do a bit more. So therefore, the market falling, I think, is part of the requirement of the Federal Reserve. Otherwise, they'll keep pushing it. And if the US falls, we can outperform, but we can't really be rocking here. So just be a little bit careful is all I do. And because whatever I do, that is what I say.
No, it's. I mean, equity comes with underlying risk, and I'm just speaking this for the benefit of our viewers, that ultimately equity is about volatility. It is not a fixed deposit that you will get straight line returns. The challenge has been that a lot of folks who've come to markets post-COVID, they've not seen the testing time of volatility. The reason why you get higher returns in equities is because it's always volatile. Very simple stuff which we sometimes underestimate. So Samir,
And actually, one quickly, because I was worried about this over the weekend, is to do with the Bitcoin and this Tether and all that. Because there is no way Tether can stand. Because it's like this, that if you have a bank deposit, and for a few weeks they say, or for one day they say that, oh my God, maybe the deposit is not, you're not going to get it back. And 1 hour later they say that we have got funding for X number of $1 billion. So don't worry. Now you can, take your money or your money with the bank. Do you think anybody will say, now, okay, thank God $2 billion has come, so I won't take it? Unless you say that it's become a government bank, a nationalized bank, then you may say doesn't matter. But if you just say that I got some funding to be able to hold on to the one-to-one there, or in simple terms for the public, that your deposit is safe, would you say thank God? Or will you say not again and quietly take it out? And if that goes, that is an $85 billion, sort of amount, and creates more panic. All I'm saying is just relax, wear colorful shirts and enjoy.
Nantara always tells me, where's Nantara? I can't see her. Nantara, every time when we have these heated arguments in newsroom, Nantara will always message me on WhatsApp by saying, take a chill pill. So Samir is saying, in this market, take a chill pill. Samir, but in terms of the setup, I'm just trying to draw a parallel here, just a parallel here, which is that when we had inflation fears last time, when we had a similar situation where macro was a bigger concern than micro, we saw a massive underperformance in mid and small cap stocks, and then a polarization of the market started, which is 8, 10, 15, 20 stocks only did well. Could that happen also this time? Because this time if the concern is macro inflation, then small and mid cap stocks will underperform, and the polarization of the market will start in 10, 15 stocks.
So see, right now, why it has not happened according to me, because the money has come in from the domestic guys and not just through mutual funds, but directly, and maybe they feel it is too boring to buy the bigger companies. And maybe because of that, it has not happened. So I think in a sense, everything is relative. Why I say that the Indian market is a little bit, I'm nervous because I'm nervous about the US market, and if the US market is bad, the Indian market cannot be good. It's the same story. The large caps are not good, the mid caps cannot be good. And therefore, it's all a continuum. But right now, only because of the flows, which I think in the end we have shown that flows don't matter. I would agree. It may not be polarized, but I think that the large caps have to do better than the mid caps, because the premium of mid caps to large caps is quite high. And there is no reason for that, because it will grow a little more, because even that growth is now being questioned. And you saw that already in the tech sector, where the IT services guys, which were trading at 45, 50p versus the 30p, the 45, 50p guys have got hit much more than the 30p guys. Even though you may say overall everybody has fallen.
Okay, that's Samir Arora reminding all of us and our viewers also to take a chill pill. It's good to do that. Wear colorful shirts. Long-term story, of course, very much intact. Thanks, thanks a lot, Samir, for joining us live today.
Thanks a lot. Thank you.
Well, it's that time of the show where we also get you the words from